Before you decide on a brokerage account that you want to start with to invest into the Singapore stock market, into the three big banks, DBS, OCBC, UOB, or even dividend generating real estate investment trust, you need to understand the difference between a CDP linked account and a custodian account. So in today's video, I'm going to share with you all about that and my own strategy as well. Hopefully you take away something, so watch through to the end. Let's dive straight into today's video. Let's go. So what exactly is a CDP account? A CDP account stands for the Central Depository Account that you create when you want to buy into the Singapore stock market through a CDP linked broker. This is operated by Singapore Exchange, SGX. When you're buying through a CDP linked broker like DBS Vickers, Phillip Securities, UOB Kay Hian, OCBC Securities, the list goes on. They are buying the shares for you and transferring it over to your CDP account. Let's say I buy into DBS, the shares transfer over to my CDP account is held under my name. When I want to sell these shares, I need to transfer it over to a brokerage account that is CDP linked. And the fees are definitely higher when you want to buy through a CDP linked brokerage account as compared to a custodian account like Momo Singapore or Trade. Because it is not CDP linked, the shares are actually held under the broker in your account under the broker. So anything happens to the broker, you might not really know what is going to happen to your shares. So that is the things that you need to consider before starting your investment journey. The choice of CDP or not is only applicable for Singapore stocks. US stocks are all held in custodian accounts, so you might as well just go with a low-cost broker like Trade or Momo Singapore. I'll share with you a little bit more about my own strategy and the thought process behind how I decide whether do I go with a CDP linked account or a custodian account. Let's look at this table differences between a CDP account and also a custodian account. Ownership, as I mentioned, you own the shares directly under your name when you buy through a CDP linked broker. After buying, it goes into your CDP account. So what about selling the shares that is in your CDP account? Doesn't mean that you buy with DBS Vickers, you need to sell with DBS Vickers. You can also sell it through another broker that is linked to your CDP account. On the contrary, when you look at a custodian account, you need to buy and sell through the same platform. So I buy on Momo Singapore, I need to sell on Momo Singapore. And the fees for a broker that is CDP linked is more expensive as compared to Momo Singapore or Trade, and these are called low-cost brokerages account. I'm personally using DBS Vickers. The cash upfront trade per trade is $10.80. This excludes the SGX clearing fee. Anything that is charged by SGX, this doesn't include. So take for example, recently I bought into DBS and also UOB. The fees that was charged to me was roughly about $13 to $15 after including the SGX fee. I'll put the exact amount right over here. Whereas when I buy REITs on Momo's platform itself, per trade only cost me $1-ish. If you're asking the strategy and the differences between the two, I'm using DBS Vickers to buy into stocks that I know I'm going to be holding out for the next 20 to 30 years. I do have that time horizon and I'm not going to be selling anytime soon. So DBS Vickers gives me that sense of security that the stocks after I buy, it is transferred over to my CDP account which is held under my name, and I just keep it there, collect dividends and not think about it. Whereas when I buy into Singapore Real Estate Investment Trust, I'm collecting dividends, yes, but I'm not sure whether will I be holding it out in the next 10 to 20 years. So I'm buying REITs through Momo Singapore, which is a low-cost brokerage account, and every single time I do a trade, it roughly only costs me maybe $2, $3 depending on the amount that I buy. So this is the differences between the two. Before you start your own investment journey, you need to decide, are you going to be buying and selling, taking advantage of the fluctuations in prices to profit off? Then go ahead with a low-cost brokerage account because there's not really a use case when you want to buy and sell frequently. If up until this point of the video you have decided that you want to go with a low-cost broker, Momo Singapore is running their sign-up rewards deal until the end of October, an amount worth up to SGD $750, and they go by the various tiers again. Deposit your first $100, make one buy trade and you will get up to SGD $20, $2 daily for the next 10 days, and thereafter cumulatively reach SGD $3,000 in deposit, make 3 buy trades and you will get 3 Tesla fractional shares worth USD $20 each. Thereafter, when you cumulatively hit SGD $10,000 in deposit, make 10 buy trades and you will get another 10 Tesla fractional shares, each again worth USD $20. So in total you're getting 13 Tesla fractional shares worth USD $260. And if you're asking, is the SGD Fullerton Cash Fund 5.8% per annum returns for your first 30 days still ongoing? Yes, it is ongoing. So for new users, sign up and deposit into the SGD Fullerton Cash Fund or the USD Money Market Fund, and you'll be enjoying 5.8% per annum returns on your first 30 days on a maximum deposit of $80,000. More details will be down in the description box below. If you want to sign up, you can use the link down in the description box below. Let's get back into today's video. Let's go. it is definitely more expensive unless you can afford it. For peace of mind, go with a CDP Linked Brokerage account. As a fresh graduate myself, when I first started investing, I started with a low-cost brokerage account first, but as time progresses, your earning capacity increases, your savings increase as well, and that is where you can consider using a CDP Linked Brokerage account to buy into shares that is held under your name. So my own strategy is that with shares that I want to hold in the next 10 to 20 years, I'm using DBS Vickers to buy, which is transferred over to my CDP account, and per trade it will cost me $10 over. But when it comes to things that I don't think I'll be holding in the long haul, or I want to frequently buy and sell just to take advantage of these small profits, then I'll use a low-cost brokerage account like Momo Singapore. They are still pretty established. They are a listed company in the US market, Futu Holdings. Momo Singapore is relatively safe of a platform in my own opinion. So this is not financial advice, definitely do your own research. I've done mine and my own choice is that I'm trading with Momo Singapore. I'm also using Safe Trade's platform. So if you've watched all the investing videos on my channel, you do know that I'm using these two brokerage accounts. And in addition to that, with buying into Singapore banks, I'm using DBS Vickers because the cash upfront trade per trade, it only costs me $10.80. And if I add on the SGX clearing fee every single time that I buy, it will roughly cost me like $13 to $15 thereabouts. This video is something that you need to know before you start investing into the Singapore stock market. I hope for those of you out there, before you start your journey, this video is helpful for you. If it is, let me know in the comment section below, and if you have any more questions, leave it down in the comment section below. If not, DM me on Instagram. Next week's video will be a full tutorial guide for Momo Singapore's platform because a lot of you have asked, how do I buy into it? What is it all about? How do I use the platform, etc. So stay tuned. Sunday's video will be Momo Singapore's full detailed beginner's guide. I'll see you in my next video. Bye-bye. One more thing I want to add is that even if you start with a low-cost brokerage account and subsequently down the road, you want to transfer it over to your CDP account, all you need to do is just sell away off Momo's platform, incur the transaction fee of selling it away, and then just immediately buy it on a CDP linked broker. You will incur the transaction cost of selling away and also buying it again from a CDP linked broker. That is the only differences, and probably a small price fluctuation in the stock market. So sell immediately, buy immediately on the other platform, and that is how you can actually transfer it over to your CDP linked account. Momo Singapore does have a transfer feature that you can transfer your shares to your CDP account, but that will definitely cost more. So I'll put the screenshot right over here, the details of how you can do so if you would like to. But my own strategy is that subsequently down the road, if I say I want to transfer it over to a CDP linked account, I'll just sell it away off Momo's platform, buy it on DBS Vickers, a CDP linked account brokerage, and it will be in my CDP account. This is just something I want to add on, a little bit of small tip, or rather my own strategy behind it. Again, not financial advice, go and do your own research, but I hope this video has helped you in one way or another. I'll see you in my next video. Bye bye.